In this clip, you see Richard Nixon taking the dollar off the gold standard and then lying to you, telling you that debasement won't happen, but your dollars will be stronger. Check it out.
I have directed the Secretary of the Treasury to take the action necessary to defend the dollar against the speculators. I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold or other reserve assets, except in amounts and conditions determined to be in the interest of monetary stability and in the best interest of the United States. What does it mean for you? Let me lay to rest the bugaboo of what is called devaluation. If you are among the overwhelming majority of Americans who buy American-made products in America, your dollar will be worth just as much tomorrow as it is today.
This man right here is solely responsible for taking the dollar off the gold standard. But there was a Congress, there was people that voted on it, and he was just a puppet. But his administration is the one that pulled the dollar off the gold standard and made the dollar worth nothing. Since 1971, $1 has been $1 because you and I agree upon it. The same for $100, 50, 20, and so forth. Right now, you have an option to opt out of the system and you can conserve your wealth, because what this action did caused monetary debasement. That's what he's lying to you about. You know, he said this back over 50 years ago, so it's not anything that happened in previous years, but they've been lying to us for a long time. And right now, the Ponzi is almost up and Bitcoin is here to save the day. And with that, what's happening, crypto crew? Sean's coming back at you, another cryptocurrency video. We have a jam-packed video for you today, so we want to get straight to it. Taking a look at our first update from the Rational Root. What is this showing us? This is showing us that this is right now a reaccumulation phase. If you look at halving 2, halving 3, right before the halving, what were we in? We were in a reaccumulation phase, and every single one of these cycles, they don't exactly repeat, but they definitely rhyme. So this reaccumulation phase led almost all the way up until the halving, and then look what happens. The price then gets that supply shock, blast up to the upside, then we have the lull out, and then we bottom out here, go into another reaccumulation phase before the 2020 halving, supply shock, blast up to the upside, price action goes up, makes new highs, and right now we bottomed out and have been in this reaccumulation phase. The one thing is, if you note this reaccumulation phase compared to the other two, is that we haven't really got too overbought. We haven't got too much to the upside. We haven't got too excited in the market. So could we see a little bit more uptick in the price before the next halving? Potentially. You have to wait and see. But either way you cut the cloth, you see that this could lull out and be just a long reaccumulation phase over the next 8 or 9 months while leading up to the next halving. Another update from Stock Money Lizards. He's telling you, do not get fooled. Every single time we come and bottom out, we have about over 500 days until the next peak, but that's after the halving. So keep that in mind. So right now we bottom out, reaccumulation phase, and right now we're in reaccumulation phase up until this dotted line. Once this halving happens, 550 days from mid-April, you're looking at roughly probably about a year and a half after that. So you're looking at sometime between October and December of 2025 to get that parabolic run up. But either way you cut the cloth, we're in an accumulation phase. Bottoms have been called. Rinse, repeat. Right now you should be stacking sats. Another update from Stock Money Lizards. And right now we're about less than 482 days from the halving. If you note this before the 2020 halving, we did come back down and retest this box, but the bottom of this box, this range, because this was due to the pandemic dump right there. March of 2020 was when we came down and retested it before we had that blast off. So can something break? Will something break in the system to cause us to go back down to these levels around the $15,000, $16,000 range? Will that happen? This bottom here is 15.6K. So could we go back below sub 20,000 if something happens? That could happen. We could have that shock in the system, something, whether the stock market crashes, and there's major investors that are making big bets that the stock market will crash. Michael Burry, this gentleman right here, if you don't know what he just did, this came out a day or two ago. He has bet $1.6 billion on a stock market crash. So he says that the market's going to pull down. It does seem to look like it could be some top out action, start to put in some lower lows, after already being extremely overbought. But this is something to definitely pay attention to, as this gentleman thinks we're going to see something break. And looking at this here, the net percentage of domestic bank tightening standards for commercial and industrial loans to small firms. Why do we care about this? What are we looking at? So there was a couple recessions over the past few decades. One was in the early 90s, but every time we've seen an uptick in this, what happened thereafter? In the early 90s, we had a recession. The dot-com bust, we had another recession. In the 2007-2008 financial crisis, we had another recession. And then look where we are right now. We had this major run-up of all of this tightening standards in 2020. And they're not calling it a recession, but that's what we were in. And then we just came back up and we're doing the same thing. So what's 2024 looking like? It could be a macro recession. Is it going to hit the stock market? Look what PNC is doing. They sell $750 million worth of bonds as banks rush to raise cash. So if you look here, anytime the bank is looking to sell bonds, that's not something you want to be in, but they're going to be tightening up on their lending. And this sort of goes hand in hand with this chart is what we showed you, because they need the cash because they're cash strapped, as you see some banks are going under, but also tightening up on their lending standards. That's when recession follows. So keep this in mind. Without further ado, let's hear from Mark Yusko, the CEO and CIO of Morgan Creek Capital. And Mark's going to be talking about how the banks play this game and how it's not fair and why we have an option to opt out. Let's hear from Mark.
Well, so we had this system based on trust with a bunch of untrustworthy people. Get this, the banks have paid fines larger than the market cap of Bitcoin for fraud, money laundering, all kinds of bad stuff, like cheating Darren out of money that he borrowed from Mark, because they're unscrupulous. And not all of them, but many of them. And now with triple entry accounting, with blockchain, with a ledger that is permanent, immutable, and not corruptible, we solve that. So the banks are freaking out. They're like, no, we skim $7 trillion a year out of this system. It's 6 to 8% of global GDP goes to the banks for trust. But we can replace trust with truth. You wrote down 100, I wrote down 100, and the third ledger says it's 100. And no matter what I say or what you say, the ledger says it's 100. No one loses. We all win. And we take that $7 trillion of frictional costs and we can liberate it, okay? And get more creativity, more productivity. And the future is very bright, but we got to get through this transition where the banks are clutching to keep control of this antiquated system that needs to go.
There you have it from Mark Yusko. And we're in that first they laugh at you, then they fight you phase. We're in the fight you phase. The banks are going to fight to hold their power. And what this looks like moving forward, time will definitely tell. But one thing that stays consistent is that Bitcoin is uncensorable. No one entity can control it. It can't be shut down. It can't be printed. It can't be deleted. Bitcoin is that true hard form of money. And the banks can't compete with that. And with that, I'm Sean with the Bitcoin Bros. You guys like this content, go ahead and smash the like button. If you haven't subscribed to the channel, go ahead and show us some love. We appreciate the support. With that, that's all I have for you today. And I'm out.